And we are live officially. Good morning and welcome to Money Matters. My name is Nev. We are broadcasting live, of course, every morning only on onedealaway.com. So I'm excited that you are here. I hope that you are excited as well. And in today's episode, as always on Thursdays, or mostly, I can't say always because sometimes I've changed it. I won't lie. We are doing real estate market update. And boy, do we have stuff. I have so much stuff for you that this is going to be a packed show, and we actually might not even get through everything. But don't worry, if we don't get through everything today, we'll just continue tomorrow. No big deal. I want to welcome everybody watching this live. Welcome, welcome, welcome. Feel free to say hello in the chat. And if you're watching this on YouTube, make sure you say hello in the comment section. Do hit the like button. Do subscribe and hit the bell button so you get notified every single morning where the show goes live, which is every single morning. So, anyways, today we get to talk about all kinds of things of what's going on in the real estate market. Are people buying? Are people selling? What's going on with the rentals? Are the prices going up? Prices going down? What's happening with mortgage? Because that's also affecting it. And before we go into all of that or any of that, we actually have a little bit of information and news of what's happening with the stimulus package. We know that there's going to be something happening today when it comes to Congress or Senate or whomever else it is that is doing this stuff. So I want to cover those pieces first, and then we're going to jump into everything because you know what? When it comes to people getting into real estate, buying, selling, renting, living in it, it is connected to the economy. It is connected to employment or unemployment for that matter. It is connected to income. And so we have to talk about all of those things. And now, since we've been waiting for this week to kind of see what's going to happen, because this is the key week, as you remember, because many of the benefits or the care package, I think it was called Care Act or whatever. I can't keep up with the name of this act, y'all. But anyways, that is all set to expire this weekend. And so we have got to get some news. And so I've been eagerly awaiting to see what it is that they get to tell us to help us understand of where we're going. So as you can see, covering a whole lot of stuff. You definitely want to be here. Today is July 23rd. It is Thursday. And so you definitely want to be here to learn exactly where the market is going and what's happening with our money. So let's do this. All right, y'all. And good morning, good morning, good morning. I kind of cut that fast because I got a lot of things to cover and share with you of what I have discovered. So let's do this. Let's get started. So first piece that I wanted to share with you is the new stimulus package. And it sounds like it is being expected today to start talking about the unemployment benefits and the checks and all kinds of different things and like what's in this puppy. So here we go. They're actually the Republicans and the Senate is basically they're ready to introduce their long-awaited proposed stimulus package today. So that's kind of what's going to be happening. And so here is a little bit of the news of what's inside. What can we expect to see? The second stimulus check of $1,200 is included in this proposal package. However, we don't know if that's going to be passed or not. And there's also some conversation of upping that to about $2,000. But it's only available for like people under $40,000. So there's definitely some uncertainty that we don't quite know how this is going to happen. There are some people that are saying that threshold of 40 grand is not going to hold. There's going to be unemployment benefits return to work bonus. So they are actually leaning towards reducing severely the unemployment benefits from $600 a week to about $200 a week, which could have potentially negative impact on millions or tens of millions of people. Let me correct myself. But they're saying that they're going to extend it until the end of the year. But they're going to introduce a return to work bonus. Right now, it's proposed at $450 a week cash. Now, this is an interesting one right here for me because when I look at that stuff, I go back and think to myself of like, well, you're assuming that people are just lazy and don't want to go to work. And Sure, some potentially are because they're making more money not working than working. So it makes sense to stay at home and not actually go to work. However, vast majority of people cannot get a job even if they want to, and there are some reports coming in that the posting for jobs has actually slowed down. So we've seen a little bit of spike in May and June, and it appears that right now those that wanted and needed to hire have done so, and now they're basically hunkering down for fall and winter and are not necessarily hiring as much. So that's kind of a challenge piece right there. And the other piece that is kind of curious for me is, is that bonus for people that just don't have a job and you want to encourage them to go to a job? Or is this bonus going to be for everybody who has a job, right? I don't know that stuff, but it's going to definitely be interesting. And we could argue both ways of what that should look like, but we don't know exactly what is going to be. Payroll tax cut. A payroll tax cut would eliminate Medicare and Social Security tax. And the President Trump has said that he would actually veto any bill that didn't include this stuff. So I think they're going to have to include it. We'll see. But now they're saying it might not be a cut per se. It's more like a tax deferral as opposed to the upfront cut. Uh, excuse me. They're talking about $105 billion to reopen schools, $15 billion for child care centers. This includes $70 billion for K through 12 schools, $30 billion for college universities, and $5 billion for governors to spend at their discretion. And they're saying they're targeting approximately $1 trillion for state and local aid. And this is an interesting one here for me when we talk about billions of dollars to open school. Again, a lot of this stuff is yeah, sure, I think that that's great, but it's not necessarily that people are not wanting to open schools because they just don't want to open schools. They are thinking about not opening schools because the logistics around the pandemic and keeping everybody healthy and safe is nearly impossible, right? Because right now we're all like physically distant and we're all staying within our own little family pods or whatever you want to call it. It makes it much simpler when you start getting kids into the school. Now my kid is interacting with your kid is bringing your germs and your family germs to the school, my kid is bringing mine, they exchange it at the school, my kid brings it. Do you see what I'm saying? So it's not that simple. It's not just the schools are like, whatever, we don't want to open because we just don't want to go to school. It has more to do with the health and the pandemic and like the logistics of how do you do that stuff. And it's really hard to wear a face mask for like 8 hours a day and kind of live with that stuff. And now you have little ones, I mean, they're hard anyways, right? Even without a face mask. And now you have like, 50 kids in a classroom. That's just insane. So now they're saying like, well, maybe you need to reduce it down to like 12 kids. Well, good luck getting that many teachers. There's just not enough teachers and they're not getting paid enough as is. And I think, yeah, many teachers would love the opportunity to have like 5, 6 kids in a classroom. I mean, talk about fantastic. Simply no way to get it done. So it's going to be interesting. All of these things are going to be incredibly interesting. And so we'll see kind of how this works. I mean, I think it's great that they're putting this money in it. But you know what? At the end of the day, it doesn't really matter if you can't open the schools safely. Liability protections for businesses. So they're saying they want to issue this to protect the hospitals and schools and to have like a 5-year liability protection retroactive to 2019. And I think it has more to do with sort of the schools and hospitals are protected in case you get infected there. Now, this brings another argument potentially of, yeah, that's great. You protect the businesses and you give money for schools to reopen. But are those parents going to be comfortable sending the kids to school? You know, is that going to be the thing? Are they going to be trying to homeschool them while they're home working and all of that stuff? I mean, I feel it for the parents. I really do, y'all. My heart goes out to you. It's rough enough just being a parent, but now you got to be a parent and a teacher and a healthcare provider and add on all the other stuff. And it's really, really rough. So again, it will be very interesting what this looks like. Student loan forgiveness. So they're saying don't expect this to happen. They are basically saying that they think that there might be a $10,000 forgiveness for borrowers who are struggling financially. Now, It doesn't necessarily explain right now what struggling financially means. So we're going to have to see, and it's probably going to be this super weird gray zone where you're going to have to provide some stuff. But again, I simply don't know yet. That's kind of where it is. PPP, they're saying it is going to be extended, set to expire now August 8th. They're saying it is going to be potentially or likely extended. Coronavirus testing, they're saying they're going to add some money for the testing and contract tracing. And basically, final thoughts, they're saying Congress has until August 7th to reach a deal on the new stimulus when members leave for summer recess, part two, until September. If they don't finalize legislation in July or August, then the new stimulus could be delayed until after Labor Day. However, if Congress finalizes the new stimulus before August 7, it is possible the second round of stimulus checks could be sent as early as late August. Now, one part that I do want to mention is that if they do reach it even by August 7th, but don't reach it this week, there's going to be, I don't know, 32 million people that are going to be suffering greatly because their $600 a week additional check is going away this weekend. So I want to point that out because I think it's very, very important, and not many people are talking about all of that stuff. Now, a glass of water. The hydration. You got to do it. And now, for my second act, let's go in and talk about real estate as promised. So I think stimulus check was very, very important. Now it's time to talk a bit about real estate. So let's see how far we can go. One of the things that is interesting is that Google search has actually rolled out a new feature that when you type in mortgage, you get all kinds of cool stuff about it, including explaining the terms of like what is APR, what is mortgage, different. Sorry, y'all, allergies are coming back with a vengeance. Different features and things about it. And so this is an interesting piece. We're not going to go into it. You can definitely search it if you want to and check it out and geek out. But for me, when I look at this stuff, what is important for me to look at this stuff is that when new tech devices and tech things are happening around a particular market, it tells me one important thing, and that is that this particular industry is on the rise. Yes, it is, because it looks like real estate is starting to kind of rebound in a similar fashion of what we've seen shortly after the crash in the stock market, in the Dow, S&P, and Nasdaq. Now, how exactly it's going to pay out, it's anybody's guess. There's a lot of risks associated with it, but a lot of the government of how they put in the rules and regulations and where they end up pumping the money into is what's going to drive what happens. I have, since March, been saying that I expected that things are going to basically die down, which they did. I expected that summer is going to start going on the rebound into the fall, which it has. It's the part that makes it a bit tricky right now. That we don't know. I don't know what's going to happen for fall because it rides on what ends up happening within Congress and Senate when it comes to laws. We know that some of these forbearances and eviction pauses and that kind of stuff is set to, some of them are set to expire this fall and some of them are set to expire in spring. But we'll see if some of these bills and that kind of stuff is going to change it. Because if it changes it, then of course the market expectation and my forecasting is going to change. If it stays the same, then of course I don't see the need to change my forecast. So right now, it's a bit on the wait and see moment. Right now, we're going to uncover that there's some very positive news, potentially positive news in the market. So let's go. Let's do this. Mortgage interest rates as of today. Well, they're saying yesterday, but this was published yesterday afternoon. So it's as fresh as we can make it at 7 a.m. Not many people are up at 7 a.m. releasing stuff, it turns out. 30-year fixed mortgage is that it's up 1 basis point and is saying that it's about 3.15%. 15 average is down 4 basis points for 2.68%. 5-1 ARMS adjustable rate mortgage is 3.19% and it's unchanged. And one thing to again keep in mind, same thing that I talked about last week, is to pay attention that the ARMS are 3.19, but 30% is 3.15. So basically, it's still cheaper to get a fixed rate versus an adjustable rate mortgage. And again, that tells me that overall we are looking for potentially this to go down. It's not a 100% guarantee, but it is more likely than not. Clearly, I was not completely right last week because it did take up 1 basis point since last week. But to me, it's very interesting and weird that you would have the adjustable rate. And for me, long term, it appears that the banks and the mortgage providers, mortgage lenders, are not expecting the interest rates to go up anytime soon because typically this is lower than the 30-year mortgage. So it's very, very interesting to me to look at this stuff. If we look at the average mortgage interest rates and kind of what's happening, as you can see, we're mostly slightly up. I mean, barely up, except for the 15-year fixed. And so, again, I would call this flattish. But I do understand that it's not completely flat, 100%. So that's kind of what's happening with the mortgage rates. Now, we're going to go in and jump and sort of talk about, what are some of the reasons of why the pandemic hasn't crashed the market, of what's going on there, because, many people have expected it to crash, and there's information as to why it didn't. We covered some of this stuff in the previous episodes, but you might not have watched it, and sometimes we got to hear information multiple times to have it stick in our heads. So let's cover that right now. Uh, and they're saying that there's a multiple things for it. One of it is the record low mortgage rates and the dearth of home for sale are two key reasons that help explain why house sales staged a dramatic rebound. And it is very dramatic. We'll be covering a lot of these things. Uh, Rates on 30-year fixed mortgage rates dipped this week to a record low of 2.98, but borrowing costs have remained historically low. And yes, you can still find below 3% mortgage. When I talked about the 3.15, that is an average mortgage right now. Of course, there's some that are much higher and there's some that are lower. So you can find it in the twos right now, as crazy as that may sound. There's also there isn't much of the new construction that is also leading to all predominantly older stock of the homes and low overall supply. So you have low supply, high demand, low interest rates, mortgage rates, right? Low borrowing costs. All of these things are definitely pushing individuals and pushing the real estate market on up. Then you, of course, have the mix of willing buyers, tight inventory, and that's what's helping push the median home price up 4.1%, which is a record. So they're saying that the median in United States right now is $295,000 and $295,300. Median price for a very long time was right about $250,000 for the homes throughout the United States. And as you can see, we are approaching to over 295,000 right now. And there are some reports that are saying that the average might be around 300 or slightly above it. So we're looking at this band between 295 and about 305, 315. So let's call it 300 for our purposes, because then we can really get into the stuff, because it just depends on kind of who you ask. And it's very hard because real estate is not like stocks where everything is publicly listed and it's right there and everybody has the data. I mean, it's spread out throughout. And so they're trying to triangulate all of the different things and what's on the market and trying to kind of come up with this sort of rough what's happening in the U.S. But of course, the average in place like, I don't know, Mobile, Alabama is going to be very different than the average in Seattle. Washington, right? So, but they take all of these different things, and they typically take like the top markets, and then try to take the bottom markets, and then they kind of mix it together and come up with like random number. So numbers that you're seeing, they're going to differ for that very reason. They're not going to be exact same thing. But we can say that it's about 300,000 right now, whereas before it was about 250,000. That is a huge jump, y'all. That is a very, very big jump in only a few months. I mean, we're talking maybe 3 to 6 months. So that's a very, very big jump. And so that's kind of an interesting piece to definitely pay attention to. Firm underlying demand and limited supply will continue to keep a floor under home prices even during a slow recovery in the economy. And you can see that there are some households that are talking about the households that have been hit the hardest by the pandemic. And of course, the hardest hit are obviously the lowest income earners. So below $35,000 a year, they have been hit the hardest, whereas the individuals making $75,000 and or more have been hit the least. And of course, everybody in the middle is everybody in the middle. And that is a very sad story of where we are thanks to what's been happening within the financial industry as a whole. That, of course, the more money you make, easier it is to keep on making more money. The less money you make, the harder it gets for you to get out of that sort of rat race, as Robert Kiyosaki would say, and switch over and potentially make more money. And so that's the reality, a very sad reality of the world. Now, I do want to point out that it is absolutely possible, 100%. If nothing else, I potentially can stand and serve as your story. It is possible to go from there to go into the higher earning piece. What you're going to have to do is a lot of education, a lot of studying, and a lot of will and mental power to change everything you have ever known about money, about investing, about life, and make drastic changes in your life, like turning the leaf 100% and potentially having to cut off friends, family. I mean, literally, you have to transform, metamorphosize into a completely different human being in order to switch from that stuff. But it is absolutely possible. It's not easy, but it's possible. And so, if you are determined to get yourself from the point where you are right here at this sort of peak of people who are making less than $35,000 a year and struggling financially, really being impacted, you're going to have to do some major changes in your life if you want to switch over to the yellow line or jagged line, or potentially completely off the chart. Excuse me. But it is absolutely 100% possible. Okay. So I want to make sure that you understand that. I don't want you to get discouraged and say, yeah, the rich get richer, the poor get poorer, and woe is me. While it is true, the only way, the only salvation out of this whole thing is for you to actually do something for yourself and get yourself out of that whole the poor get poorer piece and switch over. And so instead of going out there and hating, pointing fingers, playing the victim mentality, because has it served you? Has it helped? Has it done anything to change your life story? Probably not. So that means you're going to have to do something very different, and it cannot be small incremental changes that everybody talks about, because it's never going to happen. You have to make drastic moves in your life of how you behave around money, what your beliefs are around money, what you're saying, what you're thinking, what you're watching. And you should be watching Money Matters live, and you should come and check out the things on onedealaway.com. We actually do have some free courses to help you out, and everything else is beyond affordable, I would argue, so that way you can actually use some of this potentially stimulus money, and let's get you out of this $35,000 a year. Let's get you into the higher earning capability so that you can participate and play within the market and win. Okay, I'm done. I'm done ranting. Let's go and continue to learn. The National Association of Realtors pegs the median income for new home buyers at $93,000 a year, underscoring the point that today's housing market is more vulnerable to skyrocketing unemployment rates if job losses hit more high earners. And as you can see, the higher earners haven't been hit as much. And so this is part that I think it's very interesting for you to understand of who's going and buying. Vast majority of people are not earning 35 or $75,000 a year because they can't. How in the world do you earn, $50,000 a year and buy something that is 300,000 asset, right? You just can't, right? So of course it makes sense that 93,000 is sort of the average median, I guess, of who's going out there and who is buying. Another recent factor is that the 2.2 trillion CARES Act passed in April by Congress concluded 12-month forbearance option for borrowers, which we already know because we've been discussing that here on the channel. And the Mortgage Bank Association, the MBA, showed 3.9 million borrowers, or 7.8 of all U.S. home loans in forbearance as of July 12th. This number has dropped slightly since last time we talked about it, but not by much. So it's basically staying roughly the same. So I want you to understand that the number of people in forbearance hasn't shifted much, if at all, completely. Now, one of the other pieces that I think it is very, very interesting to talk about and consider is that there are some of the other pieces that they're talking about, and they're saying, well, the sales. Oh no, I clicked on something and I shouldn't have clicked on it. There was I, there was an X on the site, and I clicked on it thinking it was going to remove something else, but what it did, it just killed the page. Who knew? Who knew? Anyways, you'll see it when I potentially you'll see it when I share with you here. But what I wanted to share with you is, let me see if I can get this nice and big so that you can actually see it. So here we go. There's another report that is coming in that is talking about the spikes in the market and what's happening and how people are jumping in and buying stuff. And I didn't highlight a bunch of this stuff because we were talking about all of these things. But what they're saying and what we're seeing right now is that a very interesting thing is transpiring. We are seeing actually that while people are jumping in, let me see if I can do this and kind of focus on it. Well, people are jumping in to buy, and we talked about why, right? We're seeing mass exodus from large cities. We talked about it why. If you haven't watched the previous episodes, go back into Money Matters on the YouTube channel, and under the different sort of tags and stuff, you will see Money Matters and you will see real estate. And I've been doing weekly updates, so you can definitely binge watch, and you should, because it gives you this nice sort of progression of what's going on. But we've talked about of why people are exiting the cities, and of course the impact on that stuff, and that people are going in buying much bigger homes. Land is very, very big and very important piece to consider. But what we're seeing is that the rents, we talked about the rents actually starting to kind of trickle down in some of these areas, but we have reports now that the rents are actually jumping up, and not slightly, but by a lot. And that is part of the problem. So now we have people who are looking to buy, who want to purchase, but the prices, what are prices doing? Well, they're going up. Why are they going up? Because supply is low, demand is high, because people want to get in. So we're entering potential stages of FOMO, which could potentially make real estate a bit bubblicious, which I am very, very excited. Now, here's kind of what's going on. You have homes, and what is happening is that you are having multiple offers happening in homes, and the homes are actually selling at ridiculously high rates. And we're going to talk about more of this stuff and kind of what's going on. But this particular piece that I want to share with you is that let me see if I can find it. So here's part of the story that I wanted to share with you from this particular article, and that was that they have listed they have listed a property, and here's kind of what happened. Right, I was surprised by the number. They basically got an offer for more than $160,000 above the asking price in less than a week. This is huge, y'all. Huge, huge, huge. Right? And so they are actually going out there. They're listing homes at a competitive prices, and people are going in and competing like crazy, offering all of this money. I mean, literally throwing money at the people who are selling. When I said this is a seller's market, I was not kidding, y'all. So there you go. If you're looking to sell, now is the time. Now is the time. I was anticipating that I would go fast, but my realtor was also really surprised by how high it went. She told me there were 50 buyers looking at 4 or 5 houses, including mine, over the past weekend. The sense of urgency buyers report telling stem from a few factors. The request for more space, work from home, remote learning increasing, look to be beyond long-term phenomenon, social distancing, which I would like to call physical distancing. So if we could please change that. Constraints that dampen the appeal of public spaces such as pools, parks, speed at which other buyers are willing to make offers, and a desire to lock in record low interest rates. All of those things combined, and then people are looking in and they're saying, oh my gosh, we like this home, but boom, it went out. Boom, it went out. Boom, it went out. FOMO kicks in. People start running out. Next thing you know, people are throwing money left, right, and sideways, offering above and beyond of what it can do. And on top of that, you know what else they're doing right now? This is the hot new trend. It is not in the news, but it is in the news right now because I am telling you about it because of my personal research and going out there because of what I do in my personal life, which is provide consulting for many individuals who want or are inside the real estate. And one of the things that people are doing is that, when you make an offer on a particular home and then they have to go in and appraise it, right? So sometimes when you go in and you say, well, the home is selling for 200,000 and you're like, okay, I'm going to pay, $200,000, but then it appraises at 150, right? For example, what ends up happening is that if you are using mortgage to purchase that home, you have basically two options. One option is that you, as the buyer, basically come up with the cash for that $50,000 gap to close it so that you can buy it at 200,000 because mortgage is only going to finance it up to 150. They're not going to mortgage it above that, at least right now. Okay. Or seller actually has to agree to lower the price to what the appraiser had said so that you can do this. Now, what people are doing to become very competitive, not only if that home is listed for $200,000, they're offering $220,000 or $250,000, right? But they're also inside the contract writing these agreements that basically says that if it doesn't appraise at the agreed upon price, they will cover the difference or they will cover it up to a certain amount or whatever. So people are starting to get very, 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 very creative about how to purchase this home. And it's very, very, very competitive right now. So you definitely, if you want to sell, now is the absolute time. You want to sell it now in the summer, potentially into the fall months. We'll see again what happens with the Congress of the whole stimulus stuff that we just talked about. But it looks like things are going to happen and people are going to become even more motivated, even more bullish. And I think the best time to sell is coming still, which is amazing and absolutely crazy. So I do, as you can see, I'm very, very excited. I'm very bullish as to what's happening inside the real estate space. And so I think it's going to be very interesting. And here is the crazy part of what's going on right now. Now, you have buyers, right? They're eager to go out and buy stuff. Yes, would we agree to that? I mean, we have all the evidence telling us that that is the truth. And if you don't believe me, call your realtor. They will tell you the exact same thing. Houses are selling like hotcakes. I mean, everything, literally everything is going off of the shelves. It's like toilet paper in March. And so here's what's happening. You have more and more people going in. There were some people that might have been buyers, but they're kind of sitting on the sidelines and they're seeing all of this stuff. FOMO is kicking in. Remember that. Remember that, what I'm telling you right now. You can quote me later. FOMO is kicking in. More buyers are starting to hit the market, okay? The prices are going to go even higher. Putting it out there right now. This is my prediction. Prices are going now. This is not going to go for forever. Potentially, I don't know, but definitely short term. I can definitely see this happening and I stand firmly behind this component here. You can quote me. This is obviously my opinion, not financial advice in any way, shape, or form. You got to do your own thinking, and you got to find your own financial advisors who are certified to tell you what to do. So don't rely on me right now or right here. And by the way, if you're loving this content, if you're learning a lot, smash that like button right now. Hit me up with a comment, ask a question, happy to answer it, and make sure you join me live because this is insanity of what's going on in real estate. I haven't been excited about real estate this much since 2008 and 9. So, and I'm mentioning the years for a reason, y'all. I am mentioning years for a reason. Anyways, so now what is happening? So you have buyers on one end, right? They're FOMOing in, pushing the prices higher. What's happening with the sellers? Because you got to have both sides of the spectrum when it comes to real estate. You have to have buyers, you have to have sellers. Would we agree to that, right? Sellers are seeing what's going on and they're going, yeah, I know you're saying that it's a seller's market, but I don't want to sell quite yet. I want to wait to see for these prices to go up because why would I sell my house in July for $250,000 if I could potentially list in August and get $290,000 or $300,000? Why not? I'm a wait. I'm not in a hurry. So now we're seeing this very interesting dynamic of what's going on where we have the buyers, right? And we have the sellers, and the sellers are saying, I don't know, man. I'm watching this. I don't know how I feel about it. Now, the other part that is also interesting about the whole thing, hold on, water. The other part that is also very, very interesting is that a lot of the sellers are also have to be buyers, right? While there are some investors, right, or people who own multiple properties and might be looking to sell potentially, right? Uh, they also have to have something to buy, right? And so now they're going and saying, well, wait a minute. If I sell this thing, I have to find something to buy. And so now you're playing this like super weird dynamic. If you're one of those people, if you're finding yourself in that kind of conundrum of saying, I really, really want to sell, but I also have to have a place to live, and I don't want to be a renter, although you could, right? That's a potential of what you could do. But you're saying, I don't want to be a renter. I really want to buy. You potentially an idea that you might want to flirt around with, toy around with, however you want to call it, is to potentially go in and still maybe, I don't know, buy if you're really looking to go in and buy it. And then maybe potentially rent the current place so that you can actually cover the expenses for that place and still be able to afford to buy something new. Now, I am not saying that right now is the best time to potentially buy, although who knows? It could be. It just depends. It depends on where, right? It depends on location. It depends on your needs. It depends on your financial situation. It depends on your credit score. It depends on so many things. So it just really, really, really depends of where you are and what you're looking to do. If you're a city and you're like, I want to go rural, then maybe going out there and buying something right now might make sense, right? Go and do it. I don't know. But again, not a financial advice in any way, shape, or form. I'm just saying, think through it. Don't get caught up in this crazy uh, beast of what's going on right now that is fueled by all of the stuff that is happening on the back end and the front end of the pandemic and the cheap money and the low supplies and all of that stuff. So don't get caught into that kind of stuff. The interesting piece, what I think might happen is that when we start reaching this like crazy pieces like that I just talked to you about of a person that put in and got 160,000 above the asking price in less than a week, right? They listed on one day, 7 days later, boom, they got an offer way above of what they have been asking for, which is insane, right? Um, when we see this stuff happen, the greed is going to hit some of the sellers, okay? I want you to know that. And so once it actually happens, they'll go in and start jumping in. The more greed starts hitting in on the seller side, more properties are going to start coming in, and potentially we could see some of the equilibrium and sort of shift happening. This was happening is happening right now, this second. So if you have a potential to wait, maybe waiting is not the worst idea on the planet. One thing is for certain, nothing, absolutely nothing, including real estate, goes up forever, nor goes down forever, right? Things go up and down. It is very, very cyclical. And if you have time to sort of watch out and stuff and find really good deals, go ahead and do it. Another way where you can get some amazing, amazing, amazing deals is through what I call discounted or distressed or value property. It depends on who you are and who you watch and who you listen. Now, I know when you're thinking distressed property, you're thinking like, this puppy like burned down to the ground and I'm going to have to build it. Although even that is selling now. Even that is selling at ridiculous prices. Okay, just know that. But that's not what I'm talking about. Distressed property means that it's in foreclosure of some sort of kind, right? That's what distress. Now, do they sometimes need like an update and stuff? Sure, absolutely will need it. But remember, most of the inventory out there is the older inventory, and a lot of that stuff will need some sort of upgrading and putting money into that stuff. So you definitely want to pay attention to those components and things, right? But the distressed property, basically, I like to call it value property. And the reason is that you could have a property that is right now valued on the market at about $350,000. Keep that number in mind. But you can buy it for 35,000 or 50,000. I think that that's an amazing deal. Now, think through it. Let's put our smart investor hat on, right? You go in, you find a property valued at $350,000. You pay $35,000 and you pay another, I don't know, $50,000 to basically lift it up and to really make it beautiful. You update the kitchen and the plumbing and all these different things. And so now you have put in $85,000 into the home that was valued $350,000. Let's even assume that all of your modifications and stuff don't increase the value, which they would, but let's assume it doesn't. Now you decide, I am going to sell this thing on the market, right? You go in and you put it in. Well, guess what? Supply is low, demand is high, prices are going through the roof. It would not be unheard of for you to be able to list it at 350 and get 400 or high above. Now, let's say that you don't even get 350. Let's say you get only 300,000. Did you make money? That's what my question is. Remember, you put $85,000 into it and you sold it for 300,000. Did you make money in it? And did you make a really nice chunk of change in it? I would argue yes. And if you need to pause the video and pull up your calculator and like really do that piece, go ahead and do it. I'm here, still waiting for you to actually resume, because that is another way where you can go in and buy a home. Now, right now, traditional flipping I think is very, very risky. Potential flipping, the way that I'm telling you about right now here, with this idea of the distressed property, you go in, you buy it, you fix it up, and sometimes you don't even have to fix it up. You can still sell it, and with this crazy market you likely might be able to do it. Now, of course, I can't guarantee that you're going to find the $350,000 home for $35,000, right? Especially because I don't know what the area that you're looking. I can't guarantee that somebody's going to buy it in a week. I can't guarantee that somebody's going to bet the same thing that I was telling you right here of like more than 160 above the asking price, right? I can't do any of that stuff because I don't have a crystal ball. It broke years ago. I don't know what's going to happen, but it is more likely than not that it has a potential to happen. Why wouldn't it? Because if a buyer is going out there, excuse me, and they're looking for all of these homes and everything is listed at like 300, 300, 300, 300, and now you listed at like 280, and it's compatible, but it didn't cost you that kind of money. It cost you only 25,000 or 50,000 or whatever. So for you, you're still Xing your money. You're 5x, 3x, 10x. Sometimes you can actually get 10x return on these deals. It makes sense for you. It makes sense for them. You know what? They go in, they go bananas, they compete. Potentially, you could buy it, you could sell it well above the asking price, and now you're actually making even more money. And you can go in, rinse and repeat for next. I would say definitely 6 months, but I would probably say you can keep on repeating this. This strategy is going to be fantastic right now and for the next, I would say, definitely at least 24 months. But it is a strategy that has also worked in any time whatsoever. This strategy works in buyer's market, seller's market, market, no market, market. It works. It just simply works. And if you are like thinking to yourself, there's something to this. I don't have to go out and compete. I don't have to do this crazy thing. And even if you don't want to flip it, but you want to buy it for yourself, why would you spend 300, $400,000 on a home where you can go and spend 40,000, spend another 40,000 or 50,000 to make it beautiful, refi, pull out cash, you pay yourself back for everything that you have done, and have a beautiful home. Guys, this is the holy grail of real estate investing. And if you are like, I kind of want to learn how to do that, you can absolutely do that. That is one of my specialties of what I do and what I teach people and what I help people with in not just this crazy market right now, but always. So if you want to do that, if you want to learn about it, we do offer it in one deal away. You can learn about it in the academy. So that's one option of how you can do it, or you can buy a specific course. One of the courses could be the Real Estate on the Cheap Challenge. Of course, it is available right there, or you can do it in Flip It Online Masterclass. Flip It Online, of course, teaches you how to flip it if that's what you want to do. And Real Estate on the Cheap, you can still flip it, but it's just teaching you the basics of where to find and how to find these deals, how to value them, so you don't get like goofed up in it without like buy a dud, as I like to call it. And I explain exactly what a dud is. Or you can just get all of that stuff in the academy if you want. So, anyways, it's one deal away, and just go in and find it. It's right there. You can't miss it. But I think you would be silly not to at least check it out, especially if you are in the market to buy a home, or if you're in the market to actually make mad money, providing one thing people desperately need, and that is supply. Okay, so final piece that I also want to talk about is the renters. And so here is kind of what we're seeing right here, is that we are seeing that the core logic is saying that the average rent for a single family home in May rose by 1.7% on an annualized basis. Although this represents a drop from the roughly 3% increase in a year earlier, rents on the cheaper homes still rose by 2.8% across the board. So when people say it doesn't pay off to be in real estate, you are idiots for being in real estate. People don't understand how real wealth is made, and it is through real estate. Everything else is speculation, and if you're in the stock market, it's just plain old gambling. I don't know how else to call it but gambling. Anyways, some renters, sorry, I'm very excited, as you can see. We can talk about all these economic pieces, but get me started in real estate and you can't get me to shut up. As you can see, I'm incredibly passionate about it. And it's for a reason, y'all, because it flippin' works. Some renters say that staying in their neighborhoods or even their homes is getting tougher. Ventura County, California resident Alexandra South was shocked to see a $400 monthly rent hike when her lease went up for renewal. It just didn't seem like a time or place to be instituting that kind of a thing. Even in normal circumstances, it's ridiculous increase. But it's not. This is happening everywhere, and I have been talking about it, that we are going to continue to see this stuff happening. The reason that landlords have to increase it, of course, some of them might just be greedy. Fair, cool, I'm going to put it out there. But a lot of it is, look, taxes are going up, insurance is going up, the way to maintain the stuff is going up. All these things are going up. Guess what? Rent has to go up. It is that simple. It's a simple math of kind of how it works. And I know it sucks for renters. I get it, right? But it has to kind of happen. A lot of times people are doing that. And so the landlord is like, I know it could potentially hurt you, but I can't do that stuff. Like I cannot give you a discount at my own peril. So they have to increase it, okay? And when you see everybody across the board increase, now you can leave this property that increased $200, but you're going to find something else that is the exact same thing. And here is another part of the problem. The reason that I have been saying in the future, there's going to be less than 10% of people who own all assets. Everybody else is going to be a long-term renter for everything. We're talking homes, cars, phones, Everything is going to be month to month payment for 90 some percent of people because people don't understand how that works and how that has a potential to work against them. Okay? But you and I are smarter. You are here on Money Matters. You are learning of how to potentially like earn some of these things. If you are either going to pay the compounding interest or you're going to earn the compounding interest. I hope that you want to earn it rather than pay it. And that's why you're here on Money Matters. And that's why you are considering going in and learning from One Deal Away to learn how to do these things. Okay. So now what they're basically saying is that at the end of the day, I feel extremely fortunate that we've been in a position of employment. She added that a rent hike on top of the 3250 the couple already paid diminished their ability to save for a down payment. The prices are so high here. We have student loan debt and some other personal debt that would make it hard to save that kind of cash right now. We weren't quite ready. And this is the reason why I kept saying that more and more people are going to continue to stay on the renter side, and there's not going to be many people on the buyer end because you can make some really amazing returns in real estate. Even if you don't do the piece that we just talked about a few minutes ago, when you can get into the value property, when you buy traditionally and you do it intelligently, right? Okay, you make sure that the numbers work. You don't just buy something for the sake of buying it because that's stupid, right? And we're not stupid here on Money Matters. But when the numbers work, you can still make on annual basis, between 15 and 40% return on your money, especially when you take the taxes into the account. Why wouldn't you do it? Why wouldn't you grow your portfolio? Of course you would. Of course you will because you're smart. Now, when that ends up happening, right? And people are sort of squeezed. I mean, look, she's saying right here they can't save because the rent keeps going up. They still have other bills. The income is not necessarily keeping up, and they're getting squeezed. They cannot get in and buy. That's a big problem here. That's why more people are going to be renters long term. The more prices rise, the greater the number of households who see their window of opportunity to own a home closing. There is a segment of the buying population that can't make that jump. They don't have the down payment, they don't have the income to get there. And at some point, intuitively, it will become more and more of a stretch for a portion of the buying public. And I 100% agree. As you can see, we have had an amazing episode. We're way over time on this stuff, but I have so much more to cover. So here's what we're going to do. Tomorrow, you're going to come back. I'm going to come back, and we're going to continue this conversation as to what is going on in real estate because it is absolutely amazing, mind boggling time for you to potentially make money. Again, not a financial advice, none of what I'm telling you right now here, whether it's today or yesterday or tomorrow, 10 months from now, 20 years from now, none of it is financial advice. All of the stuff that I'm saying is I'm just sharing the news and my opinion of how I see things. You have to do your own thinking. You have to seek your own advisors that you trust. You're not going to listen to some random dude on YouTube channel or even on their personal channel on onedealaway.com. Even though I think that this random dude has a lot of good things to say and has helped many, many people improve their finances a great deal and is one of the most sought out personal advisors for many of the wealthiest individuals out there and not so wealthy sometimes as well. I don't discriminate. I'm not like a bank. I want to help out everybody. So, but nonetheless, you shouldn't be listening to me because if it makes sense for me, right? It makes sense for me. That doesn't mean that it should make sense for you. You have to do your own thinking, and you have to be a big boy, a girl, or a trans person, however you identify, and make your own decisions. So if you win, that's on you. If you lose, that's also on you. Okay? All I'm doing here is providing you with news, giving you new ways to think, to mull things over, to consider, and to argue back and forth. So that's kind of what we're doing here. So I am very excited. We will be back tomorrow, and we're going to be talking more about what's happening in real estate and why I am like a 5-year-old kid right now, super, super, super excited about what's happening in this world. Because you know what? I'm about to jump in and make some mad money, y'all. Okay, so here we go. I went from like to I don't know how I feel to looking at the signs and saying, it might be time for Nev to go back into the playground yet again and own it. That's it. That's it. So thanks for watching. Smash that like button. Leave me a comment. Now we're going to go into the Q&A in the chat for those watching live. For everybody else, thanks for watching. We'll see you tomorrow. Until then, stay forever money blessed. And do remember, you are only one deal away.